Happy Tuesday, and good morning. Welcome back to another episode. I hope the whole chat is doing well. Hope you guys had a great long weekend. I know I enjoyed it, getting away from the charts for a little bit. It was nice. We got a exciting show for you guys playing this morning. Got my co-host Shy, as always. Good morning, and our man Garrett from Neos. So, good morning. Welcome to the show. Appreciate you coming on.
Good morning. Thanks for having me on today.
How we feeling this morning, boys? Markets ripping. Markets looking good. The big gap up overnight with futures from last night as well. So market's looking steady this morning. Shy, how we feeling about it?
I mean, it's like one of the rare Green Mondays. You'd say, like, I think the past month we've had some kind of Trump high stakes poker reveal that caused some stir in the market, caused some bloody opens. Those dips got scooped up. So curious how we act over here. I'm all for 4-day stock market weeks. Like, I think it's really healthy if we have 3 days off and 4 days of just stocks because like it's a trek 5 days in a row. And honestly, Fridays are a waste to be honest. Like low volatility, it's just like nothing much happens. So I don't know, Garrett, what do you think about the green pre-market action right now?
I agree. Listen, I think investors overall are always looking to be optimistic, right? So trying to find some news, regardless, over the weekend to try to start the week off in a positive direction. It's just people's nature, right? They want to be more optimistic, especially about their portfolios. They want to see them up, growing in value, either paying them income, So who isn't hoping that it's green almost every day, let alone just to start the week off in the right basis, since it is a Monday.
100%. Well, let's get into the daily rip. Let's recap what happened last week. Let's prepare for the week ahead. Monday, we had solid earnings day for McDonald's and softwarestockmonday.com. We talked about that a little bit. Shy did a good coverage on that. Elon Musk made an unsolicited offer to OpenAI, which they rejected. Several other stocks made major moves following their quarterly results. Tuesday, we had SMCI provide a long-awaited business update and lofty revenue guidance. Upstart got a major lift after earnings, and the Trends with Friends crew discussed the golf industry's disruption. So shout out to that show. If you guys aren't watching that on the Stock Twitch channel, make sure you guys are tuning in. Wednesday, market fears picked up alongside inflation's hotter than expected reading. Meanwhile, buyers eyed several breakout retests in the software industry. Robinhood beat estimates, and Reddit rolled over a bit. So Reddit coming in. Thursday, Coinbase couldn't follow Robinhood higher despite positive quarterly results. GameStop flirted with the temptation to buy Bitcoin and other digital assets. And Shy revealed his 5 top stocks to watch. Shout out to that. Everybody should check that out for sure. And then we got Friday, the tech-heavy NASDAQ and S&P indexes made new all-time weekly closing highs, showing the trend remains the bull's friend. And new SEC filings showed Michael Burry went on a buying spree. Weekend rips Ben and Emil recap the wildest moments on Wall Street. So make sure you guys are tuning into that on the weekend when you're bored sitting around looking for stuff about the stock market. Make sure you guys are tuning into the Ben and Emil show. And yeah, that's gonna wrap it up for last week. Shy, you got any big thoughts on what happened?
Yeah, I mean, we could start with Monday. I think there's a sentiment towards software names this cycle where good results causes gap ups, like 20% moves. Monday.com's earnings was nothing like a Palantir or Cloudflare where it deserved re-rating as a stage 2 AI winner. It was purely a good report that I think it was catching up to the software trade because they've been lagging for a couple months. And you saw that reflected across the board throughout the week. Robinhood is really growing up in front of my eyes. Like they're becoming like that big fintech player in that space, like the clear tier one. I think everything if I was a SoFi shareholder, like I just have my gut would just be so a pain right now because everything that Robinhood's doing right now was kind of what SoFi promised years ago. Execution was poor. UI never improved. I don't know if it's anything about the marketing, but like Robinhood knows their audience, knows how to market their products, and they create this huge financial flywheel now that they're not just a brokerage. Like they have a lot of folks have those Robinhood Gold cards. A lot of people transfer their IRAs and Roths into Robinhood because of that promotion they did, and like now they're stuck there. And there's gonna be a massive transfer of wealth from boomers to millennials to Gen Z that they're probably gonna be using Robinhood because it's a sticky ecosystem now. So I think you saw signs of like Robinhood like becoming that fledged image, and also their crypto volume is through the roof. It is becoming a massive crypto player, and I know that Coinbase followed suit the next day with great crypto volume as well. And that's more of a pure bet on the crypto trade. And I do believe that Coinbase is a lot more cyclical than Robinhood, so it's a lot more risky on what cycle the crypto's in. I think Robinhood is now going away from the weaponizing volatility, which is essentially what they did before. That's how they made their money. Now they're becoming this financial ecosystem, and I still don't know how to value them because they're not a brokerage, they're not a bank. I don't think they're a pure tech play yet. They're creating this own category for themselves, and I put it in the bucket. It's too difficult to value or price, so I'm just watching and seeing how the story plays out. But I don't know. Garrett, is there anything that you noticed in this past week that caught your eye?
I would agree on that. I mean, listen, I think some of this is just the continued tailwind of talking, right? New administration coming in, and obviously Trump building a cabinet that's very pro crypto, and also just very pro markets. And so again, back to like just green, right? I think they're going to try to, drive any amount of support and tailwinds that they can get into the markets, whether that be direct Bitcoin and cryptos. We saw like Bitcoin run to what, like 110 roughly, coming on the heels, of his election win and just the people that he's putting into cabinet. So like, I agree with you. I think on the Robinhoods of the world, right, even whether you're saying opportunistically, that volatility or that crypto is helping drive, I think you're right. I think they're becoming a more diversified business overall. But I think what's just like interesting and what I'm hearing from most like big investors that we're speaking to on a daily basis is like there's no short of information coming out, whether that's going to cause vol to the upside or to the downside, right? There's opportunities there because there's just so much happening from this current administration and then from inflation. This is definitely a completely different market to be managing and dealing with than we saw last year over the last 4 years, really. But not unsurprising either, right? If you looked at, Trump's first 4-year term, same thing, right? We've got all sorts of crazy tweets that used to come out. We'd wake up, the market would be down 2.5%. I do think people take those opportunities looking back at history, even to today, of like those are dip buying. So generally what we're hearing is a lot of cash on the sidelines, that because it's been an asset class. So being able to earn 4 or 5% on your cash is a great way to sit and wait. And then when those sell-offs happen, try to buy some dips. But I think that's exactly what we saw really on Wednesday with that whole inflation number, right? We did see initial sell-off, and then we saw obviously a pretty strong rally back off the lows, of the morning session. And that's, I think, just, really just showing the optimism, right, of investors, the entrance really of like the retail investor doing a lot of it themselves these days. And I think that's going to continue to support any type of volatility event to the downside, right? It's going to be followed by, dip buyers is what I'm hearing from everybody.
Yeah.
Do you believe that's why we're seeing such an immediate V-shaped recovery? Because I think a lot of investors down the back of their head, there's trillions of dollars in the money funds on the sidelines that if there's a significant sell-off, it will get bought because rates will be going lower. Nobody knows when, but it's not going to be 4 to 5% for too much longer. So I think, do you think that's kind of why we're seeing such a resilient market in any dip? Is it an immediate V shape? It's not even a range bound.
Yeah, I do. Listen, I mean, we're talking trillions and trillions of dollars sitting in money market or cash allocations or cash alternatives, and earning 4 to 5% while you wait, right? We haven't seen that in decades. And so to be able to be comfortable sitting and waiting, anytime we're seeing those sell-offs, great. This is a great opportunity for me to, just put more in. I think I've heard more frustration from folks actually that they go to buy the dip and it's so short-lived that like they've missed it, or they're just not getting the opportunity for, a more normalized correction, right? That 5 to 10% that the market, traditionally has had. So yeah, I do agree. I think people have been really happy to sit and wait and cash at 4 to 5%, but anytime there's some type of, sell-off, they're definitely buying that dip as quick as they can because they think they know there's so much cash there that's going to jump in front of them that they're just, it's worth taking 1% off the highs, 2% off the highs, maybe at most, to get back into the market.
Yeah, 100% agree. And reminder for the reminder for the audience, if you guys are not checking out Garrett and the team at Neos, make sure you are. Go on Twitter at Neos Investments. make sure you guys are following them because they got some great stuff to take advantage of. So just wanted to throw that out there. Here's some bullets from the weekend. Uber accuses DoorDash of anti-competitive practices in a filing in California Superior Court in San Francisco. Uber accused DoorDash of coercing restaurants into using it as their exclusive or sole preferred provider for delivery, leading to higher costs for both restaurants and customers. Trump Media lost $400 million on just $3.6 million in sales during 2024. Revenues were down 12% year over year, with investors unsure whether the availability of its Truth Plus video streaming service in the fourth quarter will spur growth. The company has not held an earnings call since the SPAC merger, leaving investors to wonder what will turn this form of a holding company to a real business. Valid concerns there. Frigid temperatures cooled the U.S. retail sales. The lowest average temperatures since 1988 kept more Americans indoor during January, hurting sales at most stores, from car dealers to department stores. Additionally, these figures showed fewer shoppers than anticipated rushed out to buy goods ahead of Trump's tariffs. So, the retail sector and that whole area taking a hurting during January. We had Broadcom and TSMC are reportedly eyeing an Intel deal. The Wall Street Journal reported that Intel's rivals are each eyeing potential deals to break up the struggling U.S. chipmaker into two. Broadcom has been closely examining Intel's chip design and marketing business, while TSMC has separately studied controlling some or all of Intel's chip plants. Do you have any big notes or big takeaways you wanted to talk about from this, Shy?
I mean, Trump Media is a joke, so like, don't. That's not real business, guys. So please
I
don't
agree.
invest thinking it's a long-term thesis.
Not when we have all the other platforms we have,
I mean, just look at them. Like, they're losing 400 mil,
Yeah.
and they're making only four. I can create a business where I'll make $4 million and lose $200 million. Like, it's not difficult, guys. So like, I wouldn't touch that one. Retail sales. That's an interesting one that really didn't cause too much stir in the markets. I thought that combined with like hot inflationary numbers, like maybe that combination would make people feel wheezy. Because right now, recession isn't really a fear that's hitting the headlines. Right now, it's purely, honestly, it's inflation. But is it though? Because CPI got bought up like within a day, and PPI wasn't that great either. So I know the CPI was a lot of one-offs. It was like the bird flu that caused the egg prices. I forgot the other one that's like COVID related, and real estate's a heavy component of that. That's eventually is going down. But either way, like, I'm surprised retail didn't cause any stir. But for the Broadcom and TSM is a pretty big one, because I think it is a case study of what happened at Intel in the past decade. It's a great case study of poor corporate governance. This is what occurs when you have a board of directors that doesn't really know what's happening in the marketplace, how they can front run a new revolution. They disrespected AMD eating their CPU lunch, and they dropped the ball on Foundry. Like, Foundry, I cannot believe Foundry didn't succeed in Americans AI, like competing with TSM. I get that TSM is a much better product, but Intel's not even in the game right now. Like, Intel is legit just on the sidelines, and that's a crazy thing to say regarding their Foundry. So I do think that it's probably going to become more of a reality where their fundamentals are a mess right now. Foundry is losing so much money, and the tech isn't at the point it needs to be for them to even launch or scale. They have interesting partnerships, but like, even then, like, their testing is not that great. And machine learning and AI is already so difficult to find that end product outcome. Do you really want to settle on like the less of the two names? No, you want to go TSM. So that's exactly why you're seeing a lot of people pay up for the TSM. And I do think Intel, I think there's where there's smoke, there's fire. I think there is in this situation. I do think that it is going to get split up. And I do believe, I wrote to my subscribers this morning, AMD might be at risk on this because they've always been the beneficiary of Intel's demise. Like, consistently, like, Intel has not been able to compete with them. If TSM and like Broadcom enter the picture, I think they're gonna essentially lift all boats, like make the shitty company at least somewhat competitive, and that's going to come the expense of the x86 for AMD, and that might be a new competitive headwind that hasn't really been there the past couple years. So I don't know. What are your thoughts about all these headlines?
Yeah, listen, I think two like more general points I would make is I think you're right. Broadcom, TSM, like we're just the tech trade, right? Whether that be being derivative off of AI or just in general, like that's not going to stop, right? That's the wave of automation, the next level of computing process. Like that's just what everyone talks about. I feel like in the daily investment landscape, we can talk consumer, we can talk other things, but at the end of the day, like tech is just such a bellwether and a heavyweight in pushing the markets and where people want to be for the long haul, even if you take that at like a broader scale. Like, so we're hearing a lot from investors, like just they're constantly keeping a core allocation to tech. If you're not a single stock selection, individual or don't have the time for it, right? There's always been this allocation now to just the NASDAQ 100, taking tech exposure, making sure you're there where like innovation and growth is ultimately happening. I think also like importantly, just kind of bringing it more macro back from like these frigid temperatures, slower retail sales, like although that was like very short-lived, I think had not covered very much. Like the general discussion is like what's going to happen with just the consumer with interest rates at these levels. Like we do, and I mentioned how optimistic investors are, but right, there are plenty of underlying concerns that could be changing the dynamics of the market in an instant. What we're not talking about is like the higher for longer interest rates. Although everyone's saying, oh, that's healthy, that means we achieved a soft landing and job growth is all there. Well, I don't know. What if the government jobs, that were created last year get stripped out now with the new administration? If the job market's not as strong, and you think about just the level of interest, I mean, the U.S. government's paying $1 trillion a year, right? Over $1 trillion a year in interest payments, right? Not getting principal paid down. I mean, that's just like a staggering number. When we've talked about like 1 to 2, 3 trillion that was, paid out to solve the entire, GFC back in 2008. So I think there's some underlying macro themes that investors definitely should be taking a look at. And although some of these things are short-lived, maybe by media coverage or talking about, just because there's other more, single company discussions. I mean, we could see market dynamics change in an instant, and maybe that's where the volatility picks up. People have been buying that dip, but right, if something material comes out, that this higher for longer interest rates and administration, currently puts, the halt on certain things with tariffs. I think tariffs generally are now being used, obviously, just as a negotiating tactic. I think that's what it feels like. But if those countries don't come to the table, right, in the next several weeks and make some advances in being open to those dialogues, although publicly they're saying they are, who knows if they get there? If not, right, that could have much more of a material impact on a, daily price of the markets, than I think some people, might think. So I would always say watch out for or be prepared for those volatility shocks. Wherever they're going to come, you could wake up tomorrow and there could be a significant volatility shock. Make sure before you buy the dip that you're feeling comfortable, with the market and putting that cash to work. But I think those are kind of just some general themes that we're hearing from investors over the last week is just tech's not going anywhere, and always be aware of the unknown that could come from current Fed and administrative tweets and social posts.
Yeah, I couldn't agree more with that. With the market we've been in this whole year, right? I mean, it's just it's different, right?
It's
I mean, we
too
can come
easy.
out.
It's too. This game is not meant to be this easy, guys. Like, it's not going to be permanent the way it's been. Like, I'm
No,
telling
it
you,
is
like,
not.
it's going to get choppy.
I mean,
I
on the heels
agree.
of 20% plus years, right? I mean, like that's markets up over 50%, right? In
I would
20,
love that,
26
but
months. So,
that's it's kind of a
Well,
fairy tale. You know,
well, it's not.
it's
I mean, I say this all the time on the stream. Like, the S&P has not touched their 200-day moving average in 18 months. That's
it's time.
unhealthy. That's extended. We have to be range bound for that to catch up, or have a pullback. Like, I don't know which one, but that's unhealthy. It's very extended, this rally.
Yeah, I'm with you. These are all the earnings happening this week. So for me, a little bit lighter on the earnings side of things. Not as many, impactful companies for what I trade, but definitely some companies to keep an eye on. Carvana. We got Etsy, Walmart, Baba's a big one that's been ripping lately. Unity is in there. I know, Shay, you like Unity. You want to talk about that a little bit?
Yeah, I mean, I do think that Unity is going to be the turnaround stock of 2025, and it's the reason I believe that is because, again, they have an incredible tech. Like, their tech is incredible. The duopoly in a gaming engine, poor corporate governance, very Intel-like. But they have a new CEO, COO, CTO, cleaned house, first year with the new management, and I do believe that they are also reverting back to a subscription model. And their Unity 6, which is their newest, latest, and greatest thing, is already downloaded by 500,000 folks. So I think that you're seeing momentum now in their newest product, that you're hearing the new management be more developer focused, because essentially as a gaming engine, like you're all about the developers, and that's what the previous CEO or management just did not understand, and he caused a he ruffled a lot of feathers with that runtime fee fiasco. I'm glad that was a straw that broke the camel's back, but like they have a new manager now, and I do think that the market is mispricing how much of a tailwind the democratization of AI tools is going to be for a name like Unity. Like that DeepSeek playbook reveal isn't just a catalyst for AI tools. Like it's also going to be a major catalyst for Unity on like AI powered gaming engines. Like you're going to see like those AI tools are going to remove a lot of barriers on creating these games. Like they're going to make AI assisted game developing scalable, affordable, accessible. And I do think that this is one of those things where narrative follows price action, and you're seeing them down like what 70% I think from all-time highs. So the market's still viewing them as through the lens of its past missteps. Like I said, pricing backlash, developer attrition, monetization struggles, but they're doing everything you want on a turnaround story. They cut the fat last year. They went through an investment cycle where that's why their fundamentals look really wonky. Their revenue looks really low because they cut out the departments in their organization that was money losers. Like it was like so far fetched. Like if it worked, great, but it was a unicorn dream. They're going back to their core, what they were all about, and what that duopoly is in the gaming engine. And their tech is also applicable across the board. DeepMind, like Google's product DeepMind, is built on Unity. Avatar, the latest Avatar movie, was using Unity's technology. Like it's not, and Toyota just partnered up with Unity for the next EV cars. Like it's not just a gaming company. Their tech is applicable across so many industries, and there's also an industrial angle. So right now, when you're seeing AppLovin, I know it's like a different business, but like they have somewhat of an ad tech overlap. You're seeing AppLovin run. Unity's creating an AppLovin like product. So if there is even a glimpse of some market share taking away from AppLovin, like that's a massive tailwind. So like I think this company is poorly mispriced. AppLovin tried acquiring them 2 years ago at $60 a share. Clearly, as a Unity shareholder, my position would be drastically different if that happened, because I'd own AppLovin and it 10x, 15x since then. I'm like, that's a burn. That's 100% a burn. But I think that worst case scenario, like it has a high floor. Like Meta, AppLovin I would love it if they acquired Unity. So like I think worst case scenario, it's an M&A target. But best case scenario, they turn the ship around and their tech speaks for itself, and they run. So yeah, that's my 2 cents on. That's not just 2 cents. I gave a lot over there, but I love Unity for this year, and I'm giving them 1 year though. Like if they don't prove it to me at this point next year, cutting baits. I'm too emotionally attached to it potentially to not see how flawed it is. Maybe that's the case, but I'm giving it 1 year, and if it turns around, I'll be great. I'll be happy. But I've been adding the past couple months.
Good stuff. Yeah, any thoughts on Unity, Garrett?
I don't on Unity. I don't follow it. Obviously, I just got a great education from Shay in it. But
Yeah, he's a man with that. He's a man with the rundowns.
yeah, he knows it well. But I would say just like looking at the earnings, I think probably the one that sticks out to me the most is just Walmart, right? Just as a way to gauge, U.S. consumers and, how is that playing out? Obviously, they've had a good run relative to their major competitor Target, right? And it's certainly outperformed. But I think that's just a good one to give investors kind of more of a pulse of what's going on with the actual consumer, at the moment. And I think that's worth watching.
Yeah, 100%.
Some other calls I can make here as well, because I have a couple holdings. Global E is reporting pre-market on Wednesday. They're essentially the white label service for Shopify and cross-border transactions. So like the international revenue in Shopify was the most impressive part of their report last couple weeks ago. So I do believe Global E, I think they hit a new 52-week high. Like they're probably going to produce really great numbers. A lot of the luxury European retailers this cycle produce really strong numbers as well. That's the bread and butter for Global E. So that's probably going to show strong prints. Don't know what's priced into it. Alibaba Thursday morning, like Alibaba's on a tear. It's up 60% this year. Curious on like if fundamentals matter with his name. It's usually treated as a bucket trade on China. So don't know what's going to be about that. Jumia, I mean Jumia is just the one who is just a pain to own. Solvency risk, not solvency risk is minimal, but currency headwind is a major thing in Africa. So they reported really strong Black Friday numbers. Uh, so I'm expecting a strong print from them, but I need some more GMV growth. And I just this is another name that's on a 1 year time clock for me as well. And Mercado Libre Thursday afternoon, we got Latin America Thursday afternoon because I do think Nubank is also reporting. I don't see them, um, but yeah, Mercado Libre, they're the Latin American king. They Mercado Pago, Mercado Libre, like they own the e-commerce fintech space in that area. Like if you want Latin American exposure, like it's definitely Mercado Libre and then also Nubank. And you're seeing all this news headlines in Brazil and like not in America right now. Like it's very like in Colombia as well. Like it's very pro business as well. It's turning into that, so they should benefit with it. And I think that's really it. I see it's a pretty light week. Next week's, I think
Next week's
when it
hot.
really yeah, it's really hot. I think Snowflake. I think a lot of like the software mid cap names are reporting. So calm before the storm for me because I think I have a lot of holdings reporting next week.
Yeah, I agree. It's gonna be a fun week next week. Here's some charts. Tesla, what is that? 20 moving average. Yeah, hitting that 20 moving average. I actually have been keeping a close eye on Tesla. We went down to that 326.59, swept that range low. That was the November 27th low. And as of now, that is the protected low on Tesla. So I'm interested to see if this wants to get a little more action. I'm definitely liking the way she looks, but not enough points of confluence to get like heavily long for a swing trade here. But I'm loving Tesla here. I would like to see, a strong daily close over that 370.19. That would give me a bit of a change in the stated delivery on the daily, which is essentially like a break of structure, right? I'm seeing a change in where um, essentially you guys hear me talk about lower lows, lower highs to basing to higher highs and higher lows. That's essentially what I'm talking about, right? We're seeing that structure change from the lower lows, lower highs to higher highs, higher lows, and that's what I want to see. So close over that and a retest of this area that we're actually trading in right now. I would love to see for Tesla over the next week or so. So I'm keeping close eyes on that. Shay, you got any thoughts on Tesla? I mean, it's been getting beat up, but beautiful bounce from last week, and I'm interested to see if we get any continued momentum.
I mean, it's a top five position for me. I got overweight in 160, 180 range. It doubled on a narrative, and
Yeah.
those are dangerous. Like, it doubled in a matter of months. Fundamentals aren't backed up by it, so when there's any kind of FUD or some headwind type of news that affects that narrative, it gets popped a bit because there isn't numbers backing it up yet. So I do think it's
Yeah.
gonna come. Time like
I
Elon's
still
visions
think the
are
way we've dropped though is like significantly better than majority of the way we've seen some other stocks drop. But I mean, obviously
totally.
stocks are back up now. I mean, things are at all-time highs, of course, and Tesla's still down. But I just think like relative to the downside moves we've seen and the lows that we're trying to sweep right now, I'm not super bearish at the end of the day. Like at least short term. I'm definitely. I mean, I'm long-term bulled up. I'm
Well,
getting more short-term bulled up now.
listen, you guys see Elon's play. He's cannibalizing his EV business to go all in on autonomy. That's a big bet.
Yeah.
If it works, $10 trillion company. If it doesn't, it's
Oof.
going to be ugly because I don't know. You might have to revalue them as an actual OEM, and then you have to now price in their market share loss. Like you have to price in so many different things that I would be if autonomy and FSD is a dud. I'm out of Tesla. I'm out because I invested because of that autonomy vision. I think he's going to succeed because track record, he's 10 for 10. Timing is always like, I don't know when the timing is, but he's 10 for 10. That's the
Timing's
trick about
always
Tesla, yeah.
so tough, but like the accuracy has been amazing. So it's a tough one, especially if you're playing options. Garrett, you got any thoughts on Tesla, especially lately? It's been the crazy trade, the Trump trade as well, and now we're pulling back. So what are you thinking?
I mean, that's what I'm hearing. I think just talking to a lot of investors, I think the one question is Tesla okay with his additional outside business activities, right? And focusing so much with Trump and the government, so is that going to have any impact to the actual business or the innovation, right? That he's really the key behind. And I think that's the one question I'm hearing from folks, is just what is that going to look like as the next quarter or two, unfold? Also I would throw it probably back to you guys is like, are you hearing a lot, right? People are talking on earnings calls a lot about just tariffs, right? And inflation. And that's coming up more and more, I think, as CEOs are messaging that, whether that's a hedge for themselves, that if things don't go well, there's an easy, blame game. But I've been hearing a lot of that from investors, like concerned that everyone's speaking so much around tariffs just on earnings call. Like, is that having any actual impact, specifically on companies just as an unknown, as a maybe hedge into the future quarters?
100%. Yeah. Couldn't agree more. Well, there's that bell. Market's open. Get ready for the day, y'all. That market is open. Garrett, I know you have to depart from us here, but I appreciate you coming on. Always appreciate your thoughts and appreciate what you do at Neos. Again, if you guys are in the audience, check them out on Twitter. Yeah, if you have any other thoughts for the audience, feel free.
Thanks, guys. Just appreciate the opportunity to come on today. So it's great, and hopefully get on again with you guys soon.
Yeah, sounds good. Well, appreciate you. Have a great day. Market's open now,
Thanks, you too.
We're going to keep an eye on that. But we also have a special segment for the last half of the show here. We have Paul Lee from Head Capital Markets of UCAR. He's going to come on and talk with us about UPower Unlimited or UPower Limited. So here he is now. How we doing, Paul?
Hi guys. Oh, good. Pleasure to be here. How are you guys doing?
Appreciate you coming on. So I wanted to get a quick rundown, kind of just of who you are in the company, what the company actually does and is, and just for the audience, give a quick rundown of what you guys do.
Yeah, for sure. So my personal position in the company is actually, like, the official title is executive assistant, but it's actually dual function. So I am responsible for the European business initiatives of the company, and also the EMEA region, and also the capital markets on the funding side, capital raising side. And in terms of UCAR, or UPower Limited, we are a company that is dedicated to provide leading battery swapping solutions in the industry. And it's more 2B, not 2Cs, like other companies that advertise battery swapping as part of their solution, but more 2B. So we are basically setting up a lot of projects with companies, with clients in transport sector all over the world, to basically produce our solutions. Yeah.
Gotcha. Very cool. So you've talked about battery banks. Can you kind of go into that and explain that further for the audience and what that actually is?
Yeah, I think before battery banks, why don't we first go to slide 7, so I could quickly introduce our ecosystem as a whole, and that'll be easier for the audience to understand. Yeah, could you go to the next slide, please? Yeah, so basically this is the overview of our concept, right? So basically we have battery swapping for stations for different kind of vehicles, for buses, for pickups, for heavy and light trucks, for 2-wheelers and 3-wheelers, and even for electrical ships. So basically, we don't sell the vehicles themselves or just the battery swapping stations, but rather we collaborate with different leading OEMs in Asia and around the world to produce battery swapping versions of these of their vehicles. And then we also customize the battery swapping stations to the vehicle models, and then conduct battery swapping stations for our clients. And then the battery bank I will talk later, but could you please go to the next slide? Yeah. So basically, what's the pro of battery swapping battery swapping model for EVs compared to traditional charging or fast charging models? So first, it's higher time efficiency, and then a lot of EV drivers have range anxiety. Not every country has great EV infrastructure, so they're often worried about where they could get charged before the battery runs out. So it's also a good elimination of range anxiety. because these battery stations, especially in urban scenarios, they can be placed in these busy intersections, and then all the process could be done within 5 minutes. And then with battery swapping, especially under our UCAR model, the drivers don't purchase the cars plus the batteries, but only the vehicle bodies. So that could save them up to 30% of the whole cost. And then instead they rent the battery from our battery bank, and the batteries in the battery bank are invested by external investors. So basically that's a huge saving cost for the drivers and our clients. And then lastly, for sure, battery swapping doesn't require that much capacity from the local power grid, because with the traditional charging poles, or especially fast charging poles, that exerts a very strong demand from the local power grid. But not all urban power networks could support that. But with battery swapping stations and with the battery swapping models, you're basically just driving the station, and then there will be machines automatically swapping out the drained battery and then replacing it with a charged one. And then the drained batteries are just charged normally under ordinary voltage in the station, so it doesn't exert a particular strain on the local network. Yeah, so there are really lots of advantages that comes with battery swapping model. Could you go to the next slide, please? Yeah, so this is really our business model. On the top is our Yota series battery swapping stations. So UCAR is our trademark, is our ticker, but then Yota is the trademark of our battery swapping stations. So there are really different models for different types of vehicle models. As I mentioned, the pickups, trucks, taxis, sedans, two-wheelers, three-wheelers. So all of these models, we could customize our battery stations to be able to work with them. And then on the other side, on the right-hand side, is the UNEX series commercial EVs. So as I mentioned, we don't produce the vehicles ourselves, but rather we collaborate with our original equipment suppliers to customize their models to, especially their chassis, basically the base of their vehicles, to make them be battery swapping capable, so that they can work with our stations. And then the last element is the battery bank. So basically, as I mentioned, the drivers and the clients don't purchase the vehicles with the batteries, but just the vehicles themselves. So it saves a lot of upfront cost, and they rent the battery from the battery bank, and the batteries and the costs are based on the mileage and the time that they have used, and the electricity they have consumed. So yeah, this makes up our business model, which is as you can see, a circular solution here. Next slide, please. Yeah. So basically, this is just a summary of what I have said. Our battery swapping stations are compatible with all kinds of models, and then they are more. They takes up less space in urban settings, and they are more environmentally friendly. Next slide, please. Yeah, and currently, just a big overview. We can dive in later, especially like plans and projects for this year. But then now we have a lot of partners around the world, especially in South America, in Europe, in Thailand, Hong Kong. Those are the four biggest markets that we are now developing, and then we have a lot of partners in. For example, I'm sitting in Netherlands, and then we have and the European headquarters of Netherlands is UNEX, which I'm currently the director of. And then UNEX has set up a joint venture with Anthrol, which is one of the biggest taxi association in Portugal, based in Lisbon. And then we are working on a battery swapping taxi solution for them. And then in Peru, we have Modasa, which is the biggest supplier of truck locally. And then we are providing, again, battery swapping solution for trucks with them. And Trip Mobility Group is also in Peru, and they are the biggest provider of two-wheelers and three-wheelers locally. And then we are providing the two-wheeler and three-wheeler battery swapping stations, and also the corresponding models for them. And then in Hong Kong, our partner is Cornerstone Technologies, which are providing blockchain-related services to our battery bank model. And then in Thailand, we also have a lot of partners as our one of our biggest shareholders there. And then we have good relations with MG locally, who with whom we basically customize their models to also battery swapping versions, and then collaborate with local taxi companies, to basically make their taxi services greener and more efficient. Yeah, next slide, please. Yeah, so basically now, in addition to these projects that are to be really launched in scale in 2025, we have already a lot of pilot projects already happening in the PRC. So as you can see in the picture, there are different types of battery swapping stations for different models in different provinces. For example, in Zhejiang, we have one for taxi, and then in Shandong, we have for vans. And then in Sichuan, you see the big stations, those are for light and heavy trucks. Yeah, and then Anhui, it's for two orders. Basically, people can just walk in and then take out a full battery and then replace the drained one manually, and then quickly get back to the road. And that's it. If you could kindly also show the video to the audience, I think it'll be easier for them to understand the whole process.
Yeah,
like a
that
typical
should be popping up here. Let's see.
Yeah, battery swapping process, different. Yeah. For them. For taxi. Pickups. Thank you guys. So basically, you can see in the video, it's really quick to swap out the battery and replace the drained batteries with new ones. It's typically only 5 to 10 minutes. You can just grab a coffee and then you are ready to go again. So this really is applicable to so many industries, in transportation, logistics, in ride hailing. Yeah. So a lot of scenarios, and that's why as I mentioned, we have a lot of partnerships with different with different clients in different sectors worldwide.
100%, yeah. So I was curious, battery swapping. This is kind of newer to me. Why is this becoming increasingly important for EVs in the future here?
Yeah, I think I think battery swapping model is especially on the rise compared to, as I said, traditional charging and fast charging model because of several reasons. Could you please pull up the slide to slide number 2? Should be easier. Yes. So if you could, next slide, please. Yeah, so this is just providing context that we see that the global EV market is for sure growing. The trend is not stopping. It's growing around 20% each year, and then by 2030, it's reaching around 30 million units in sales. Next slide, please. And as I also mentioned earlier, the biggest concerns when it comes to buying an EV is first battery life and replacement cost in case the battery is damaged, in terms because of long-term charging, and then secondly range per charge, because if in a lot of countries, as I said, the charging infrastructure is just not there yet. So when you finish charging at your home or at a charging point, a lot of people are worried they can't get charged, or it just takes too much time waiting in line to get the vehicle charged. And then three, the number of charging stations present. So again, linking back to the infrastructure issue, a lot of there aren't simply so many charging stations available everywhere, right? So and we as UCAR can solve these three concerns by providing our battery swapping ecosystem. Next slide, please. Yeah, and then there are some. So as I mentioned, currently the solution is fast charging, right? The fast charging model, but then it features several problems. First, the charging power grids requires high investment costs, and it takes really a long time for investors to get the adequate return for a single charging pile. And secondly, there's a high failure rate of public charging stations because it's easy to have malfunctions and also sometimes even safety issues in these stations. And thirdly, charging efficiency is relatively low, even with new technologies like solid state batteries or fast charging. It's still relatively low compared to battery swapping. And then fourthly, intense electric currents could severely damage EV battery lifespan, which results from fast charging. Next slide, please. Yeah, and then on the other hand, as I mentioned, the battery swapping market is really growing fast, and it can reach 10 billion to 20 billion in terms of market size globally by 2030. Yeah, and then there are a lot of reasons, right? The efficiency is simply higher, and then cost effectiveness. Investing in battery swapping station is far more efficient, and the return is generated faster and faster than traditional fast charging piles. And then also due to technology advancements, battery swapping stations are simply could replenish vehicles' energy needs faster, right, than traditional fast charging models. Yes, and could you please? I think that's it. Yeah.
Yeah, really good stuff. No, I had some other questions. I was curious on UCAR's competitors, right? Because I mean, I think immediately when I think EV, I think Tesla. Tesla is a company that's the company I'm most invested in, actually. And so when I think EVs and I think battery swapping, and I think of this actually becoming a thing, my first competitor that comes into my mind is something like Tesla. So I'm curious on what kind of competitors you guys have, and how you are looking to kind of overcome that.
Yeah, so Tesla is more an EV company, as well as a lot of Chinese competitors like NIO, XPeng, and BYD, right? For sure, those are the big players in the market. And Tesla actually tried battery swapping before, but actually they failed due to battery issues, because then they don't have good enough batteries to support these systems. And BYD and NIO, they do have a lot of battery swapping stations. For example, in Europe, NIO actually has deployed a lot of battery swapping stations, but then it's mostly for their own fleets. It's more to C thing. It's not a to B thing. While us, like we are not a EV company, and we don't just sell battery swapping stations, but rather we sell the entire ecosystem, right? We help build the entire ecosystem, particularly in urban settings for a wide range of clients. And basically our solutions are, as I mentioned, to be battery swapping stations that are tailored to different models, to pickups, to sedans, to two-wheelers, three-wheelers, to trucks. And then we basically customize models from our suppliers, their most popular models that are favored by our clients, to battery swapping versions so basically they could work with our battery swapping stations seamlessly. And then thirdly, the battery bank, right? The clients, when they purchase, when they engage in our ecosystem, they don't purchase the vehicle plus battery, but rather they just purchase the vehicle body and then rent the battery from our battery bank. Battery bank in its physical form is basically battery swapping stations themselves, but then the extra batteries in these stations are invested by outside investors and by us. And so basically customers don't have to worry about that huge upfront cost, which is obstructing people from purchasing the EVs they want, and the businesses from replacing their fleets to EV ones. Yeah, so really our vision is more a EV battery swapping ecosystem than just selling EV battery swapping stations or EVs like NIO, BYD, and other big players do. So in that sense, we actually don't have like competitors in a traditional by traditional definition, because nobody is competing directly head on with us, but rather we are really the forerunners in building that ecosystem, I would say.
Yeah, gotcha. Yeah, it's interesting stuff. I'm curious to see how the future plays out with Tesla, especially because I was aware that they tried to do that years ago, but
yeah,
they really didn't want to continue with it because the event that they held for the actual battery swapping was the amount of people that they invited versus how many people showed up was so minimal that that they didn't want to continue. So it seems like it's very much a thing of a trend, right? I would think if Tesla saw the trend of people really battery swapping, right, I feel like they would get back on it. But I guess that's my thoughts on that. Shay, do you have any thoughts on this before we go into any other questions?
Curious on like how, in a Trump-led presidency, how has that affected your business strategy in the future, or like the dialogue you're having behind closed doors, or like is it making it a lot more difficult with tariffs potentially down the line or whatnot? I'm just curious on that because I know it's a geopolitical headwind potentially in the Trump-led presidency, and I just want to see if you notice the difference from last year to this year.
Yes, indeed. So basically, our company is listed in the US, but as I said, as I mentioned also on the world map, the main business operations are actually outside the US. So mainly our four big markets are South America, Europe, Hong Kong, and Thailand, and some pilot projects in China. And we also have some supply chains in Asia in general. So I think Trump's policies and decisions don't really affect us, as we mainly operate in other countries. So yeah, that answers your question.
Gotcha. Okay, that makes sense to me. I appreciate that. Also, is there anything you're specifically looking forward to the 2025? Because you guys are growing like a ton this year. Is there any specific tailwinds that get you most excited for that's happening in the next 12 months?
Yeah, for sure. So could you pull up the slides again to slide 14? So basically, I've got some slides that explains our projects upcoming in this year. Those are all really exciting opportunities. I'm just waiting for the slide to load. Yeah. So basically, in Thailand, we have a very good relation with MG because our founder Johnny Lee actually worked at SAIC before. So the Shanghai Auto Group who actually acquired MG several years ago. So basically, they have a very good relationship. And MG is also now under the CP Group. So actually, one of the biggest family group in Thailand, who has also very good relationship with us, as one of their members is actually the second biggest shareholder in our company. So yeah, so it's really good relations. So basically, with MG, we are, as I said, based on our model, we are making battery swapping versions of their models, MG4s and MG5s. And then we are developing corresponding battery swapping stations that work with MG4s and MG5s to provide taxi solutions locally in Thailand. So yeah, so not only in Thailand, but also in Hong Kong and Portugal. Those will be the first markets to be explored with MG. Next slide, please. Yeah, so basically a bit more explanation on our cooperation with MG. All of them will use our IOTA battery swapping technology, and then basically the expected sales volume will be around 1,000 vehicles and 20 battery swapping stations, because normally the ratio of battery swapping stations to the vehicles will be 1 to 50, so one station to 50 vehicles, so that basically the operation will be profitable, will be break even, and then into the profitable area now. And then the expected sales is around $35 million from these markets. Next slide, please. And then also, as you might have noticed from from financial news, we have recently done a financing. Basically, we filed F3 and then done a $5 million fundraise, and then part of these funds will go to these new projects, with MG and with, as you will see, other projects in South America and Europe. But also some of them will be dedicated to developing new battery swapping stations. So these ones are adapted with AI technology, which could, adjust this workplace and then automatically fit with different vehicle chassis, and then to also be easier to upgrade since they are now modularized, and then also just in general a great boost to its operational efficiency for these battery stations. So yeah, so this is one of the technological advancements that we also plan to make to our battery swapping stations this year. Next slide, please. Yeah, and this is just details regarding our JV project with Entrol, one of the biggest taxi service providers in Lisbon. And then basically we have signed an MOU and then created a joint venture with them. And then in 2025, we're already launching the project, and then we are sending the MG and other models to them, and also along with setup of local battery swapping stations. So you can see some figures here. Plan to deploy 4 battery swapping stations in Lisbon, along with 150 taxis, with an expected sales revenue of 6 million. And then in the next 5 years, we'll gradually increase that figure to 6,000 taxis and over 100 battery swapping stations. And this expected revenue will reach around $2 billion. Next slide, please. Yeah, and in Thailand, we also have a collaboration project with Easy Transporter. Basically, they are a comprehensive transport provider in Thailand, for pickup trucks, minibuses, light trucks, and other vehicle models. And then again, we would provide around 10 battery swapping stations to them, and then sell 200 pickup trucks to them in this year. Next slide, please. Yes, and this is in Peru. We have signed a collaboration agreement with Trip Mobility Group. They are the largest commercial operator of 2- and 3-wheelers in Peru, and basically, based on this framework, their 3,000 3-wheeled and 2-wheeled vehicles will be replaced by will basically incorporate our battery swapping technology. And then next 5 years, it is expected that there will be 100,000 actually such vehicles in Peru and other South American countries gradually adopting the IOTA battery swapping technology. Yeah, so basically those are the project outlook for us in 2025. Yeah, and I would say all of these negotiations are going on pretty well. I'm personally sitting in Europe, so I can say it's going really well for Entrol, our project in Lisbon, and also we are in negotiation with, for example, Alsa and potentially Uber in Portugal as well, regarding the incorporation of our Yota battery swapping technologies with their vehicles. So I would say, yeah, this year will be a fast-growing year for us worldwide in lots of markets and with different clients. So a lot of good news will be coming up soon.
Yeah, really good stuff, Paul. I appreciate you coming on, and the whole battery swapping like side of things is super interesting to me. And I love the concept. I think it's definitely useful for the future. So definitely want to keep an eye on the ticker, and yeah, excited to see where you guys go in the next year. But appreciate you coming on. Appreciate you as always. And Shay, I appreciate you. Wanted to give you a chance to throw any other thoughts out there for the chat before we wrap up the show here.
Yeah, it looks like it's gonna be a dead day in the market, guys. Not much is happening. Is stuck at even. I don't know, was there any big macro data this week, Jordan?
We really don't have much. We have Trump speaking today at 9 Eastern. We got meeting minutes this week, unemployment claims, retail sales. Other than that, it's pretty light. We got some Fed speakers, so not much going on.
My advice for everyone as we close off: VIX hedging is cheaper than it's been past couple months. Usually, if you guys are seasonal traders, usually the VIX picks up right now until like April. So if hedging's cheap right now, like I might be looking into some June expiration hedges, but just watch out for the volatility. But this week feels like market's not red, but like it just feels like not much will happen. It's a shortened week, low volume, so don't overtrade, don't get greedy, and just don't play outside of your lane. But yeah, tune in tomorrow morning, guys.
I agree. Well, appreciate you, Dan, Paul. Appreciate you coming on and sharing everything with UCAR. That was pretty cool, and hopefully we'll have you on again. But for the audience, appreciate you guys tuning in. Make sure you guys are liking and subscribing on the Stock Twits channel, and we'll see you guys bright and early in the morning. But enjoy the trading day and stay safe. We'll see you tomorrow.
Thank you, guys. Nice day.
All right.